Hi there, welcome back to this model. And if you made it this far, congratulations. Alright, welcome back to this model. I sincerely Alright, welcome back to this model. I'm sincerely proud of you for making it this far in this module. Alright, welcome back to this chart. Welcome back to this course. I'm sincerely proud of it. Welcome back to this course. I, I welcome back to this course. I'm sincerely proud of you guys for making it this far. I welcome back to this course. I'm sincerely proud of you. I'm really proud of you for making it this far. Kudos, you are on the right path. Alright, welcome back to. Alright, so in this module, we'll be talking about the hierarchy of time frames. Alright, so the hierarchy, that is the chart hierarchy strategy, that is the name of it. Alright, so I welcome back, guys. I welcome back. Alright, welcome back to the chat. In this model, we'll be talking about chart hierarchy strategy. That is, how do we actually break down different time frames? Because now, what most people do not really understand in trading is that you don't do everything on the on the you don't do everything. So what most people do not really understand is that not everything is done on one time frame. There are time frames for every single thing depending on your kind of trader. So if you're the swing trader, or you're the scalper, or you're the day trader, I'll teach you, what works for your time frame. All right. So now, without any further ado, so let's just get straight into the business of the day. So for this strategy, so it's pretty much teaching you how to walk your way around time frames, because a lot of people never really understand how time frames work, and most times they see certain signals on the lower time frame, on the higher time frame, and they go ahead and execute it. They don't even know what to do in each time frame. Like now we are on the 4 hour time frame. I bet you, if you put 10 traders in a room and then ask them, or what do you do on the 4 hour time frame, or what is the 4 hour time frame best known for, majority of them, at least 9 out of 10, if not all of them, may not really know what to use the 4 hour time frame for. They might tell you it's for their chart patterns and start speaking all manner of things. But here, I'm here to urge you to, I'm here to teach you what actually works, as I always say on my YouTube channel. So there are different time frames for every single thing depending on your style of trading. So if you're a swing trader, the the lowest time frame to you, your lower time frame starts from daily time frame and then the 4 hour time frame, right? So if you're a swing trader, I take that again. If you're a swing trader, your lower time frame starts from the daily time frame that ends on the 4 hour time frame. Your lower time frame starts on the daily time frame and then ends on the 4 hour time frame. Okay, now if you're that is for a swing trader. So if you're a day trader, particularly, your higher time frame ends at the daily time frame. Do you understand? For a day trader, your higher time frame ends at the daily time frame. That is to say, if you open up your channel and then you tell me, okay, fine, what kind of trader are you? You say you're a day trader. Automatically I would assume that your highest time frame, that is, you take your directional bias from the daily time frame. All right, that's why you see most of these guys with YouTube channel, once they open up their charts, the max they can go is on the daily time frame. They ask them, oh, what time frame is this? Well, I take my bias from the daily time frame, and then I scale down to the 1 hour 15 minutes and do everything I have to do. So that is exactly how they and then for them, the least time frame, that is their lower time frame, ends in the 15 minutes time frame. Yeah, so the 1 hour and the 15 minutes time frame. So they work their way from daily to, that is, the most of them do not even go as high as daily. I'm just telling you, my own recommendation if you're a day trader. All right, so you ought to go at least up to the daily time frame. All right, so get your buy from the daily time. All right, so get your buy from the daily time frame, work your way down to the 15 minutes time frame, because a lot of you guys love to execute on the 15 minutes time frame, and day traders do not technically hold trades for long. uh, as the name connotes, as the name so so day traders do not necessarily hold trades for long, as the name entails, day traders, so practically for maybe 24 hours, and then they're good to go. All right, that is if the trade does not even materialize in like 2 hours or 50 minutes or 1 hour, because those guys are actually on the lower time frame messing things up. Right, they are really 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 switching things up on the lower time frame. You feel me? So anyone who claims to be a day trader, your max time frame ought to be the daily time frame. All right, and your least time frame ought to be the 15 minutes time frame. And then for a scalper, your visa folks on the 5 minutes time frame, 15 minutes time frame. So for a scalper, your for you now, that is, you love to trade the least lowest time frames, that you love to get some 10 pips, 20 pips, 30 pips out of here. 15 minutes time frame is literally a big boy time frame to you. All right, so your entries are even on the 5 minute time. Some of them even go as high as 1 hour time frame, and they place their trades on 15 minutes time frame. Some even go as low as 5 minutes time frame. All right, so all in the bid to get the tightest stop loss end possible, and then to just ride maybe 20 pips, 30 pips here and there. So that is exactly, those are the three cadres of traders. All right, so now for a swing trader, the time frames we're using mostly start from the monthly time frame to the weekly time frame down to the daily time frame, which is what I use on the 4 hour time frame. Then also occasionally I do go down to the 1 hour time frame, that is to just fine tune my entries and stuff. But ideally my major my hierarchy starts from the 4 hour time frame up to the monthly time frame. That is all I ever use on my chart significantly, most of the times. Yeah. And then for a day trader, obviously you want to start from a daily time frame and then work your way all the way down to the 15 minutes time frame. So these things always work. All right, so now let's it's just that for me as a swing trader here, I have a lot more authenticity. I'm not trying to bash your strategy, but it's just that for a swing trader, I have more authenticity because the higher the time frame, the more solid. Like, think about it, it takes about what 6 4 hour candles to give me one day. Because if you multiply or if you divide 24 hours into 4, you get 6. All right, so you need 6 of these 4 hour candles to give me an entire day. Do you understand how solid that trade would be? So that means that once the trade materializes on the daily time frame, the likelihood of that hitting stop loss are significantly slimmer compared to that of a trade forming on the 15 minutes time frame. you know slimmer than those, slimmer compared to that of a trade forming in the 50. All right, so slimmer compared to that of a trade forming in the 15 minutes time frame or the 5 minutes time frame. You get what I mean? So yeah, that's just the piece. So now let's start. So when it comes to time frame hierarchy, yeah, that is the yeah, time frame hierarchy strategy. So what I aim to do here in this course is to teach you, categorically what you ought to do in each time frame. Do you understand? So for we as swing traders, and myself as a swing trader, and I urge you to actually consider becoming a swing trader. You know why? Think about it, guys. The market doesn't move every single. I mean, it moves, but it doesn't give. It doesn't go in your favor every single time you open up the chart and then you want to do something on there. It takes a while for trades to play out. So within that time frame where the trade is trying to play out, what do you do? Do you come on here, click buttons up and down, and then start panicking, or what do you do? So swing trading helps you gain control of your time because you're not stuck on the screen, guys. We as traders are not digital slaves. All right, we're not digital slaves. We are yet the market ought to work for you. So that's why any single time you feel stressed, the chances are excellent that you're either working for the market or you are over risking. That is exactly, those so that is exactly the that is exactly the most likely, cause of your panic in the market, because most people never really let trades materialize. They just panic and they close the. Why? Because now you're either over risking again, or you're working for the market. That is, you're constantly on the screen, staring at it. You're stalking this market at this point. That's not analysis, that is stalking. You're stalking the market, and that's not healthy for you as a trader. You feel me? So you want to be able to place your trades and calmly go do other stuff. Place your trades and move on with life. Like, place your trades, run other business. If you're in school, go study some stuff, do your coursework. Just allow the market work for you, which is exactly what it ought to do. And whenever the case is flipped around, that is, you not having to work for the market, now there is a problem. Do you understand? So now, when it comes to hierarchy, I like to work my way from the higher time frame, that is for me as a swing trader, from the for higher time frame all the way down to the 4 hour time frame. All right, so there are certain things I need to look out for on each time frame, and then the first thing here being the monthly time frame. I come on here to look for the directional bias of this pair. Now, I don't come here to look for directional bias, I come to the overall. Actually, this is even the wrong chart. Let me just show you guys. Okay, so I don't come on here to start looking for entries. No, I come on the monthly time frame to just see the overall direction. Like, where is this guy headed to long term? That's exactly what I do, because the monthly time frame helps. Think about it, guys. Think about it. You have 30 days worth of trading in one candle. That is crazy. All right, that is massive. So now I can clearly see that this overall picture here shrunk into one single time frame, one piece. If this pair had like a PDF, like if this trading view had like a PDF file, and I extract this file, and I show it to you, you can clearly tell that this guy's headed south, at least headed south, because you can see from the principles of a downtrend, this is fulfilling, because as you can see from the, because as you can as because as you can see from the principle of a downtrend, this is fulfilling that criteria of a downtrend, that is series of lower highs. Yeah, this is a high, this is a lower high, lower, an equal high, yeah, lower high, lower high, lower high, lower high. Do you understand? So technically speaking, the overall direction of for this guy tends to be south, at least headed south. Now, at least headed south, yeah. So now let me just check something real quick. Oops, this was always gonna reverse anyway. All right, cool. So now we have actually established the direction for this guy on the monthly time frame now, which happens to be bullish. Yeah. Now the next thing we need to do is look out for the candlestick. Like, what was the previous? Because one thing you need to understand, how the previous month candlestick close will actually, detect, what the rest of the coming months and the weeks will be like. Do you understand? So take for instance, now we have a bearish engulfing candle somewhere around here, like so. Now this was the previous month, this was May, and the following month was June. Sorry, the following month was June. And as you can see here clearly, yeah, this was a May candlestick that closed bearish engulfing. The subsequent months that followed all actually ended bearish. So how a particular month ends would always determine how the other, forthcoming months actually, also play out. So now in this case here, and that is also a point you ought to take note of, because what we need, and that is also and and that is also a point that you ought to take note of, because one of the things we do on hard time, like particularly monthly time, is come and look at the overall direction and then the candlestick formation. Like, what was the candlestick that formed before this guy decided to reverse from here? As you can see here, this was a morning star here. All right, this was a bearish engulfing, doji here, then bullish engulfing candle. Best believe this guy closed bullish engulfed the last month's trading activity. Best believe the forthcoming months will be bullish. Do you understand? And as you can see, after an impulsive, there comes a pullback into at least half of that move, and then continue to the upside. So this is exactly what happened here. Again, you see here, this was a bearish engulfing candlestick happened. The following month was always going to be bearish, bearish, bearish. Do you understand? So how the previous month kind of, and then when we go here now, we're not putting a pin bar. This is a pin bar that looks like a hammer. Not a hammer, like a lollipop here. So this looks like a lollipop, like a stick with the sweet on it. So this is looking, so obviously this signifies buying pressure. This is the monthly time frame, and then you also need to look left as well. Where did this guy happen? This happened somewhere around here, like so. So this is buying pressure. Do you understand? This is buying pressure. Best believe, if market closes like this at any point in your market analysis, the tendency of the coming month to be bullish are significantly high. Do you understand? So this is exactly what you want to do on hard time frame. I take it again. We come on here on the monthly time as swing traders, and as swing traders that you are also, and as swing traders, and as a swing trader that you are also on the way to becoming. What we do on the monthly time frame, we just come and look for the overall direction of this guy. Like, where is this guy headed to long term? So I can clearly say that maybe in 5-6 years, or in 10 years, in a 10 year span. So this gives you the picture of a 10 year span. Do you understand? So as this stands now, this guy is obviously is obviously, so as things stand now, this guy is obviously bearish. I mean, for the fact that we still remain below this high, this yearly high here, this is still quite bearish as far as I'm concerned, because now one of the technical principles of a downtrend is, as I said every single time, you have to give me a series of lower highs and lower lows. All right, you have to give me a series of lower lows and lower highs. In this case, we put on the high here. This is a lower high, lower low, equal highs, lower low, lower high somewhere around here still. All right, so as far as this pair is still not up to this point and still trades below this green bar, this is still gonna be a lower high. Whatever the I mean, for the meantime, as far as this guy trades continue trades below this green bar, this was always gonna be a lower high from here. Do you understand what I mean? So that's exactly what you come on the monthly time frame to do. So now we have asked, so that's exactly what you come on the monthly time frame to do. So now we've actually established the direction of this guy, which is actually headed south. Yeah. So you now ask yourself, what things do I also need to look out for? Again, you can pull out some trend lines. All right. You can pull out some trend lines to just look at things from a grand standpoint, and you can see that okay, fine. Because now you need to understand that whatever thing happens on the monthly time frame, it detects what's going to happen in your 15 minutes time frame. That's why I'm urging you to please consider switching to a swing trading approach. I kid you, you will not regret this. Believe me, bro. You've seen the money I've made so far in the market. I call out this players on YouTube and I make it look easy. All right, but this is exactly what I do. All right, so this is point one, point two, point three here, and then we have a breakout and a retest. So anytime you have a breakout retest like so, this is always going to be a continuation to the upside. No brainer. All right, it's a no brainer. Trend line break here and they pull back into that trend line and then continuation from there. This was always going to be a no-brainer trade. All right, easy peasy. All right, so long story short, as you can see, like so, we have actually broken out of this downward trend line on the monthly time and it's starting to point bullish. All right, so we came on here, so this is a breakout here and then this is a pullback here and then this is a continuation to the upside. Best believe the next level target for this guy was always going to be somewhere around here, like so. Do you understand what I mean? So you see how the monthly time frame comes into play. So best believe if I had even gone down to this lower time frame at this point, so let's see how the 4 hour time frame will look. Alright, so this is exactly how your 4 hour time frame looks like. All right, this was that breakout and retest continuation to the upside. This was it. So that breakout here, breakout retest continuation. This was the game. All right, breakout retest continuation. All right, so breakout retest continuation. That's exactly what happened on the higher time frame. You see how messy it looks on the 4 hour time frame. This is why I always urge you need to always consult with higher time frames by every and any means possible. Look on the higher time frame, just work your way down from there. All right, so now take for instance, now we've actually gotten this breakout retested, so this is overtly pointing bullish. All right, so this is starting to point bullish. So now in this case here, the only thing you need to look out for are buying opportunities. Do you understand? So now back to the monthly time frame before I actually start to digress. So now on the monthly time frame, like I said, as you can see here clearly, yeah, this is exactly what has happened. So on the monthly time frame, as I've said here clearly, yeah, this is exactly what is happening. We've actually broken out this downward trend line, and then we've tested it nicely, and now we're pointing to the upside. Now, the next thing you need to do is also scale down to the weekly time frame. Now, this is where you come and mark out your levels, yeah. Because if you, I mean, I'm not saying you cannot mark out your levels on the monthly time frame. You see the way we marked out our major levels here. That's exactly what you do on the weekly time frame, right? You can also do it on the monthly time frame if you know how to adjust. So, I mean, you see exactly how we mapped out our major levels in the first section of this model. So you see how we marked out our major levels in the first section of this course. You can actually do it on the monthly time frame. Just that when it's clear out to weekly time frame, you have to come and adjust that level properly because it's gonna be fat here on the monthly time frame. I mean, it will look slim, but by the time it's clear out to the daily or 4 hour, it looks massive. Do you understand? So I actually prefer to draw it on the weekly time frame because I can see a lot more candles on there. You feel me? So now you've established a breakout here. So next thing you want to do is come on the weekly time frame. Now you may not necessarily get a breakout like this. Next thing you may even get something like this, maybe like a breakout retest here somewhere around here. So what you also need to do is go on the weekly time frame. Now you've seen the overall direction of this guy is actually bearish. Okay, now let's get on to the weekly time frame. So on the weekly time frame, you come and look for chart patterns that, or so you look. So now on the weekly time frame, you look for two things: chart patterns and your levels. All right, so these are the major levels. So chart patterns and your major levels. Chart patterns and your major levels. I take it again. on the weekly time frame, you look for chart patterns and your major levels. All right, so now major levels being where did this market reverse from significantly. By the way, if you missed the first module which happened to talk about major levels, please, I urge you to go back and re-watch that and understand it as best as possible. All right, you have these videos with you, you have your log into your platform, learn that's why I choose to host it here online, so that you can always get access to this thing. Do you understand? So you go on the weekly time, you look out for your chart pattern and your levels. The levels, you just ask yourself, where has this market gotten to, and then reverse significantly. In this case, you can simply look here. This is the bottom here. This is the bottom here. This is the bottom here. The market reversed here. So what you want to do, go ahead and do now is now connect the dots here. You can see from here to here to here to here. So now your business here is to see how you can connect all three of them together. All right, so what you need to do is come on here like so. Now please do not use horizontal rays. Connect your levels exactly with the horizontal tool that I taught you guys how to use. All right, so this is exactly how it looks from here. This is the triangle thing. All right, so I'm just using my horizontal ray to show you what's possible. All right, so now what you need to do is go ahead and connect the three. All right, so we come on here like so. You see where the market reverse here. I know you'll be tempted to put it on here, but what's going to happen to this gap on here? So you need to come on here and then put it here instead. It is about how many touches you've had, across the board. All right, so now this is it here. You put on the candle close. Watch closely. So you put it on a candle close. Now watch closely. This is the close here. This is the close. This is another close here. This is exactly how it looks. You can see we've gone ahead to actually map this guy out nicely. Map here, nice. So you see we've actually gone ahead to map this guy out nicely on the weekly time frame. We've seen like this is a chart. All right. So you see we've gone ahead to map this guy out nicely. You can see touch one, touch two, three, four, and eventually five, somewhere around that actually reverse the market. So you see these levels are quite significant. You can see how the market reacted when it came on here. It just bounced and then reversed to the upside. This is exactly the benefits of it coming on the higher time. You just look at it from a grand standpoint, so that you're not caught in the haze and the business and the mess of the lower time frame. Do you understand? So now on the weekly time frame, you can see that, okay, fine. Take for instance, let's just use this analysis from here to here. You can see that when this market broke back down below this level here, it gave you a chart pattern. Yeah. Now in this case, it came on and then gave you an inverse head and shoulders pattern. Now whenever, as I explained earlier, you're in a trade and they see it happen here, but the market is about to reverse. All right. So what you now go ahead and do, you now say to yourself, okay, fine. Since the weekly time frame is printing a reversal chart pattern, I have no business buying or selling on the weekly time frame. So you now say to yourself, since this week, so you know say to yourself, since this weekly time frame is printing a reversal chart pattern, I have no business trying to short or buy this guy at this point. Let me just wait and see. So this will help you make informed decisions. So you don't have, you see now, by the time you start using this approach, you see, so by the time, so this will help you make informed decisions and then cut your losses by at least 99%. I kid you, because most of the reasons as to why people lose money in the market, because they are short-sighted. They don't see the bigger picture. And what I'm here to do is just grant you access, show you things from a big boy perspective. You feel me? So now you can clearly see that on the weekly time frame here, we've seen a reversal chart pattern. Best believe someone on the lower time will still try to sell from here, try to buy. Just so this is a range. This is a range. Do you understand me? So you know for a fact that at least for the next couple of months you're not touching the pound sterling, because ideally you ought not to trade in a range. So this is still in a range. So your business here is to look for a trending market. And ideally a trending market, a market that has given you a chart pattern, or it is fulfilling every criteria of the predominant trend, which is the continuous formation of a lower low or lower or higher high and higher lows. And in this case here, the market came on here, balanced out nicely, gave us the reversal chart pattern, which is in this case here, this is an inverse and shoulders pattern. So this is the head, shoulder, and the neckline got broken here, and then bam, this was where. So you see now, once you established your level, yeah, establish your level, and then you've also established your chart pattern. The next thing here is to do is now scale down to the lower time frame. Again, your daily time frame is your lower time frame. Your higher time frames are the monthly and the weekly time frame as a swing trader. Then your lower time frame is the daily time frame. See how the hierarchy works here? We've gone from monthly, now we've done some things on the weekly, and now we can actually scale down to the daily time frame and then look for what to do. So now in this case here, but before you step down to the daily time frame, kind of like try to mark out your potential reversal point. That is, ask yourself, if I were to go long from here, where would the market most likely reverse from? You now put your bar right there, so that by the time you get down to the daily time frame, you know exactly, the kind of proportion and the potential pip count you're looking to bag on a trade. Do you understand? So now scaling down to the daily time frame, like so. See how you're using every time frame to our advantage, yeah. So now the 1D time frame now. Okay, so here we are. You see, on a daily time frame is a lot clearer here. So you can come on here and even adjust your level like so. So what you can also do on the daily time frame is adjust your level. So now when you come on a daily time frame, your business is to find the trend that goes in line with the overall trend. You see, so on the daily time frame here, the monthly time frame partly for directional buyers, candlestick, and then trend line. Let's see how the market is reacting, and then also when you come on the weekly time frame, mark out your levels. See how we mark out these levels premium proper. You can see the reversal here, reversal here, reversal here, and then by the time you get down to the daily time frame, you now ask yourself, okay, fine. I mean, from the monthly time frame, we can say that this guy printed a reversal chart pattern on the weekly time frame rather. So I mean, so at least from the weekly time frame, we could say that this guy had put in a reversal chart pattern, which is a head, shoulder neckline got broken. So ideally, you ought to be looking for a buying opportunity, isn't it? So now monthly is bullish, weekly is bullish, daily time frame cannot afford to give you a different signal from that. If it gives a different signal, step away. I take it again. Monthly time frame pointing bearish. All right. Sorry, I take it again. Monthly time frame pointing bullish. Weekly time frame chart pattern bullish. Neckline broken, retested. Daily time frame has to give you bullish. If it does not give you bullish, best believe you're not executing nada. You're not executing any trades. Do you understand? So now in this case here, we'll have the weekly time frame intact, monthly intact, daily time frame now starting to point to the upside. Now, for those of you guys who have loved to short here, you see, listen, these are the issues here. The market could easily blow through from here, easily balance out at this point, like so, from here, like so, and then just blow through. It would have happened. All right. So now to better safeguard your trades and your account, because your primary purpose as a trader because your primary purpose as a trader is capital preservation. I don't care what anybody says. Listen to me, fam. In this game, your see, listen, see, I don't care what anybody says, man. Listen to me, fam. Your business in this market, in this business, is capital preservation. You cannot multiply what you don't even have in the first place. So for you to have what to multiply, you have to save. How do you save? Using your helmet. You feel me? So in this case here, after you've seen this breakout here and a pullback, at this point, you're not shorting this market. You don't short this market. You don't do nothing. All right, because you could easily just continue higher. You don't short this market at this point. You wait for the market to come in line with overall trend, which is bullish at this point here. So once you've seen a nice balance here, even here you don't short this guy, here you don't short this guy, you just kindly and quietly step away, allow the market finish, because sometimes, yeah, let me tell you something that happens in the market. There are some technical, criteria and technical levels that the market wants to just go and play around with that you may not even see at the moment, and if you just click random trades and just go ahead and blow your account, it's gonna see, you might think you have all the money in the world, but eventually it starts to take a toll on you mentally, and you become afraid to place your trades. That is when the market is now ready, you'll be afraid to take the trade, because first things first, you have messed with your psyche. Do you understand? So your business from the monthly time frame, I take it again, directional buyers, candlestick pattern, look for if you can plot some trend lines in there, and then also weekly time frame, mark out your levels nicely, look out for chart patterns as well, and then on the daily time frame, if the monthly time frame is bearish, weekly is bearish, and daily gives you bullish, do not enter. You only enter a trade when the monthly is bearish, weekly is bearish, daily is bearish. The 4 hour time frame, you look for buy opportunity and sell opportunity. So you only enter a trade when the monthly is bearish, weekly is bearish, daily is bearish, 4 hour time frame, you look for a sell opportunity. Do you understand? Now the reverse is a case for an uptrend. Now you only execute a trade if the monthly is bullish, weekly is bullish, daily time frame is bullish. You still on the 4 hour time frame or the 1 hour time frame, whatever thing works for you, and you now go ahead and execute. But I personally recommend the 4 hour time frame. Do you understand? Because occasionally I have because in experience I have seen that the market, the 4 hour time frame is a lot more difficult to manipulate, man. So on the 4 hour time frame is where I actually personally love to execute my trades. Do you understand? So now, like I said earlier, if the monthly time frame is pointing north and the weekly points north, you have no business looking for sell trades. If you say selling opportunity, best believe is after your account. Most likely 9 times out of 10 times it doesn't always play out, and even if it does play out, it will stress the hell out of you. It will, and even if it does play out, it will stress the hell out of you. Do you understand? And you don't want that. You want to take the most obvious trades possible. So again, weekly bearish, monthly bearish, daily time frame has to be bearish before you execute any trade. If parametric you come on the chart and then you see monthly bullish, weekly bullish, and then daily time frame now starts to point bearish, that is a problem. Do not execute that trade. Leave it. Allow it line up nicely with the overall trend so you can blow things to the roof. Do you understand? So now, long story short here, on the daily time frame, you can see you've had a very decent, beautiful balance on here, like so. So I mean, I know a lot of people that will go ahead and execute on the daily time frame. I'm not really a big fan of that because the view count could be much, and a lot of you guys have like very small accounts. So what I would advise you do is, now you've established three things: overall buyers, chart pattern, key levels, yeah, and then the daily time frame trend is in line with the overall trend. Every single parameter in the market now answers to your beck and call. Do you understand? So now scale out to the 4 hour time frame. Let's just see how things look down there. Alright, so now in this case that every single thing lines up perfectly, you can either decide to go down to the 4 hour time frame and execute, or you can stay down here on the daily time frame and then execute this guy. So it would just be a very simple counter trend line break, like so. Just bam here and then stops at below short. So you ride this guy all the way to the upside. Now you know where now you know exactly where now you know exactly where your take profit is, which is all the way up here. Now if you add stock to the 1 hour time frame, you most likely go long here and maybe take stops below here, TP here or TP here, losing. So if you had stuck to the lower time frames, you most likely have entered here, stop loss here, TP here, and TP here, missing out on all this juicy stuff all the way from here. Do you understand? So this is exactly how you want to use the time frame hierarchy strategy. So for you as an upcoming swing trader, believe me, this is the way to go with the market. You really want to stick to the higher the time frame, the better for you guys, because it takes a lot of because it takes a huge chunk of money for the institutions and the banks to actually manipulate price at this point. It is it's impossible. It's too expensive. It's too expensive. You feel me? So that's exactly how you use. And then due to this strategy and kudos to this and kudos to this strategy. You're even able to maximize profit at ease. If you had entered here from the weekly time frame and the daily time frame, you know where the market is most likely reverse from, which is here. So you're able to hold your trades. You're confident in all these pullbacks and all these crappy things happening here. You hold on to your trades. The market goes directly in your favor. Do you understand? That is exactly how it goes. So you can turn what a day trader or a scalper will, so you can turn what a day trader would call 100 pips or 50 pips. So you would turn what a day trader would call 100 pips or 50 pips into 200, 300, 400 pips, as the case may be. Let me just so let's just see how it looks from here to here. So you see, we've turned what a day trader would have called 100 pips or maybe 30 pips, or this is 700, nearly 800 pips, because of what we are able to maximize the because of what. So you see, we've done what a day trader would have called 100 pips or 50 pips. So you see, we've done what a day trader. So you see, we've done what a day trader would have called 100 pips or 50 pips into what almost 800 pips, 700 something pips, guys. This is exactly what you get by choosing to stick to the chart hierarchy strategy, because this breaks down time frames into everything into hierarchy. So this strategy, this approach helps to break down charts into hierarchy. So this strategy and this approach helps to break down the forex charts into hierarchy. Do you understand? Into cadres. You know exactly what time frame favors what approach. You know exactly what to look out for. So you don't waste your time on any single pair. You don't waste your time on any pair. You can tell with this after this. You can tell because after this course you can literally open your laptop and in two you can tell because after this course you can literally open your laptop and in 2 minutes you can tell when a pair is ready and when it is not ready. Do you understand? This is exactly how the pro traders actually look at the market. This is how I look at the market, and I urge you, if you want to be a pro trader, this is exactly what you need to do. Always consider the hard time frame perspective of things. All right.